Brendan, first off, just give me your take on the news that we got officially on Friday. Of course, the so-called SEC and the PCAOB and the Chinese regulator as well, reaching some sort of an agreement to allow for audits of Chinese companies the way that we wanted it to take place.
Yeah, 100%. We had a great agreement, a first step for audit reviews to take place in China. And that would stave off a potential delisting of U.S. listed China ADRs, which put, almost $2 trillion of U.S. savers' wealth at risk. So a great first step, certainly. As the SEC stated, the proof will be in the pudding. So we need to see these audit reviews take place, and hopefully the companies pass as we anticipate they will.
Yeah, again, you're right. Chairman Gensler said those exact words with us on Friday. The proof will be in the pudding. Have the shares moved up too much, in your opinion, as a result, given that there still may be some rough sledding ahead? Or do you expect that, in fact, this will move smoothly from here?
Well, I think, the individual audits should be taking place. And remember, these companies are audited by the Big Four accounting firms. So we anticipate that, the U.S. colleagues at the Big Four accounting firms will be telling their Chinese colleagues how to handle these audit reviews. So hopefully things do go smoothly. And that should allow for a re-rating of the space, David. These securities trade at half of the price to earnings multiple, half of the PEG ratio of U.S. internet securities. So I think the potential re-rating of the China internet stocks, the names we hold with K-Web, hopefully is a strong catalyst for the space.
Well, speaking of re-rating, I mean, it's not as though this audit question has been the only question. You've had COVID lockdowns, which we still don't know exactly because China continues to have a zero COVID policy. You've had a crackdown over the last couple of years at this point by the government on technology companies overall. I mean, Brendan, mix it all together for me. Obviously, we know how poorly many of these companies have performed over time. Is this really a re-rating of significance, or are there still too many questions?
Well, I think that a lot of the issues you point out are really, hopefully, the wall of worry that the stocks can climb, that these companies have seen an incredible disconnect between the price action and the fundamentals. And a lot of that is because of the issues you outlined. They've certainly China internet regulation, zero COVID, HFCAA. All of these issues have really pushed investors out of the names. Within EM funds, actively managed funds have a 2% underweight to China. And so I think, if we have good earnings like we saw today from Pinduoduo on Friday, from Meituan, we get Baidu tomorrow morning, you have some of these catalysts to bring investors back into these names. And certainly the valuation disparity is really hard to ignore at this juncture.
And to David's point about, look, overall industrial policy over there, economic policy, AP's got a piece out today about a Chinese think tank that issued a rare public disagreement with the party about zero COVID, saying that it's just not working. It's endangering the long-term health of the economy. Do you see fissures there in policy? And do you have a sense as to which way it may tip?
Well, I think since the Shanghai lockdown, Carl, we've seen an adjustment in zero COVID, which in China they call the lives first policy, because if you apply the very low vaccination rate amongst China's elderly population, about 2 million people likely would have been killed by COVID. So what we've seen is since the Shanghai lockdown, you're not seeing citywide lockdowns. I just think the economic consequence of what happened with the Shanghai lockdown, you've seen a tweaking of the policy. Individual apartment buildings can go into lockdown, apartment complexes, districts within a city, but there is COVID all over China. It's, the number of cases in Hong Kong, it's like 4,000 or 5,000 cases a day. The city's not closing down. So there's clearly been an adjustment to try to mitigate some of the economic consequence of what happened in Shanghai.